Hey, what's up everyone, and welcome to the School of Personal Finance. So in this video, we're going to be talking about your personal cash flow statement. Now, when I would meet with somebody, this was always the first thing that we did because it opens your eyes. It brings some clarity to where your money is going every month. There's so many people out there where at the end of the month, they sit and they say, wow, I have no money left. Where did it all go throughout the month? I don't have a clue of where it went. So by being able to track it and using a cash flow statement, you see exactly what money's coming in and what money's going out. And there are some amazing apps that make this so much easier to do where it's just all automated. So for example, Mint and Personal Capital, those are probably the two most popular apps for feeding all this information in and having it at the push of a button where you could see exactly where you stand month to month. But in this video, I'm going to walk you through exactly how to write it all out so that you could see where your money is going each month. And then you can start to make decisions based on what it all looks like. If you're wasting way too much money grocery shopping or going out to eat, or if money's just kind of disappearing, this will help you see exactly where it's going. So now this was the first video in the course that I was creating, and I decided that I'm not going to go through with the course. Honestly, I wasn't really sure that I wanted to sell a course to begin with. I didn't get that much interest in selling the course, and I'd rather just put these videos out there so that they help, whoever it speaks to. You could go through, follow along step by step, and it'll help you in your lives. That's really the goal that I had when I started doing this channel in the first place. So next week, we're going to be talking about net worth statement, which was the second video in the course. And then we'll just keep on going through. So you might have already seen this one if you watched the preview of the course that I had put out there, but it didn't get that many views. So not too many of you went ahead and watched it. All right, so let's get to it. Thanks. So I'm going to show you here exactly how to set it all up. Just follow along step by step. So in this example, we're going to have husband and wife. So two spouses, both of them working, and we're just going to start banging it out. So follow along. So left side of the cash flow statement is your income, right? So we have monthly income for the first spouse, Michael, $6,500 per month gross pay. So one tricky thing is that you want to be able to look at this on a monthly basis, but none of us get paid once per month. Most of us are getting paid either twice a month or bi-weekly, which is 26 pay periods a year. So you have to adjust based on your cycle to make it a monthly number. The way that I usually would do this with clients is if they have 26 pay cycles, if they get paid bi-weekly, then we would really just go based on 24. And the other two paychecks we would almost ignore and just use that money to throw towards debt or an emergency fund or saving for college or whatever it may be. So we still made it into a monthly number, but just using two paychecks per month, knowing that we were going to have two extra at the end of the year to kind of play around with. So getting all this information right off of a pay stub. Pre-tax deductions, $400 going into the 401k. Now this is a traditional 401k. That comes out pre-tax. If this was a Roth 401k, then this money would be coming out after tax. So you have to know what type of 401k you're contributing to. And then for medical insurance, that is also a pre-tax deduction. And this should all be laid out right on your pay stub. And if it's not clear, you could always call your HR department and ask them if it's after tax or pre-tax. Now you might have some other items on there, like if you're part of a union or if you contribute to a catastrophic insurance plan, something along those lines. So yours might not look exactly like this, but whatever it is, just, lay it all out. All right, so then we get to the taxes. We have federal income tax, state income tax, and then FICA, the Social Security and Medicare tax. Now again, depending on what state you live in, yours might look a little bit different than this, but you just want to lay it all out so you get to that net paycheck number. So in this example, Michael's taking home just about $4,000 per month. And then we have Michael's wife, Lucy. She makes 60 grand a year, 5,000 per month. And then we just go through the same exact exercise to get down to her net paycheck of $3,038 per month. And that's it for the income side. So now if we move on over to the monthly expenses, you want to start with the fixed monthly expenses first. So your mortgage or your rent, if you have any car leases, loans, things along those lines, ones where the payments are the same month in and month out. And start with the biggest expense going all the way down to the lowest one. And then below that, we have the variable expenses. So now this is obviously the hardest part to fill in and to track because it changes every month. So things like groceries and eating out, those numbers are always going to be different month in and month out. So for your first time through, just guesstimate. Just give it your best shot. Put a number down there, what you think it is. And again, this might not be everything that's in your situation. So you do have to look through your bank statement and see, where does your money go? And throw it all on this expense sheet. Now you'll notice here I have miscellaneous 5% of gross income, $575 a month. And the reason that I always throw this in is because everybody underestimates how much they spend each month. So I tried to compensate for that by doing 5% of gross income and throwing it in here. Now, for your situation, that might not be enough. It might be too much, but you'll start to, zero in on what is actually correct the more you do this and the more you track it. So if you do this every couple of months, if you actually go back and look, if you set up an app that will track this stuff for you, then you could get very close to how much you actually do spend every month. But for now, let's just throw in 5% of gross income. And the way that I calculate that is I take Michael and Lucy's gross monthly pay, which is $11,500 between the two of them, and take 5% of that to get to the $575. After that, we have savings and investments. Now for savings and investments, they do $200 a month to each their kids' 529 plans and an emergency fund. So a total of $400 per month going into savings and investments. And you'll see on here that they are making large contributions to their 401k plan. That is accounted for on the income side, not on the expense side. So I'm taking that out right out of their paycheck to get to that net number. A few things to point out as we're looking at this. The first thing is that for the loans and the debts, we're not entering any additional information. It's just a monthly payment. So we don't know how long those loans are for, like the student loans, what the term is. We don't know what the outstanding balance is. We don't know what the interest rate is on that debt. So we're going to enter all of that in step 2. Right now, all we're doing is listing the monthly expense. And for like the credit card minimum payments, we added up all of the credit cards that they have outstanding, the minimum payments that they owe month after month. So that's where we're getting that number. And the reason it's variable is because if you pay down the card, then your minimum payment might go down the next month. So it's not the same every month. It changes as you charge more or pay more towards that credit card. Another thing while doing this is it opens your eyes a little bit to all of your monthly subscription services that you've signed up for. So if you're like me and most people, you've signed up for things like Netflix and Hulu, and you have subscriptions that you might not really use, maybe a gym membership. And at least with this, you could list it all out, take a look at it and make a decision. Do I really use this, or is this something that I could kind of get rid of? And now another important point and a tricky piece to doing your monthly expenses is that you might have some bills that you pay annually. Like maybe your homeowner's insurance, you pay once a year to save some money. So if that is the case, then what I recommend you doing is just dividing it out by 12 and including it in your monthly expenses so that you know how much you basically have to put aside each month to be able to pay that annual premium. And if you don't do this, then this is a big opportunity for you to save some money. If you change your homeowner's insurance, your auto insurance, maybe your life insurance policies, if you go from paying month to month to instead paying annually, one time a year or maybe twice a year, you could save hundreds of dollars. The trick to it is you have to have that money now to be able to pay upfront for a year. So if your homeowner's insurance is $1,000 a year, you're going to have to pay that $1,000 upfront, but you're going to save, 10, 15, 20% off of the premium. And then what I personally do and what I recommend you doing is you open up a separate savings account, like a Capital One, and you start flowing in whatever the monthly amount would have been into that Capital One account. So if you break the homeowner's insurance down to a monthly payment divided by 12, and then you send that over to Capital One every month so that the money accumulates in there, and then when the bill comes due, you just stroke a check out of there to pay the annual premium. Now that we have everything down and we added it up, We just look at what we have left at the end of the month. So we take our monthly income minus our monthly expenses, and we get this net number. So that's the amount of dollars that aren't accounted for anywhere in this cash flow statement. So when you're finished doing this, you might be thinking to yourself, this is really just a budget. But it's not a budget. We're looking in the past. So we're seeing what you have spent money on in the past, just so we could kind of forecast in the future and have a good idea of how much life is going to cost you going forward. Maybe it will open your eyes a little bit and you'll say, damn, I spent way too much money going out to eat. And subconsciously, you'll remember that and you won't eat out as much. Or you could change behaviors. But it also will throw up the red flags if there are some big fires that need to be put out. Like, for example, if you're carrying a tremendous amount of credit card debt and you're eating out 4 nights a week. Like, that's an easy fix. We could change some behaviors and start paying down that debt a little bit. But by looking at this, it does open our eyes. But this is a solid first step to get you on the path to financial security. And then the next and final step that I'll go through with people is calculating their savings rate. And it's just a simple equation. So your savings rate is how much money you're saving as a percentage of your gross income. So in this example, Michael and Lucy, they're saving $1,300 a month, right? $900 in their 401k, $200 in the 529 plan, $200 in the emergency fund. So that's $1,300. We take that, we divide that into their gross income, which is $11,500 per month, and we get their savings rate of 11.3%. So obviously, the higher the savings rate that you have, the better. That just shows that you're saving a larger portion of your income. And now there are other ways that you could calculate savings rate. Like, for example, I'm not including company match in the 401k. I'm not including if they pay principal down on their mortgage. There are other things that you could throw in there that could be included in your savings rate. But for simplicity, I just use the amount that you're saving divided by your gross income and go with it. And you want to get that percentage up as high as possible. All right, so that's it for this one. Hopefully you found that helpful. Please make sure to hit that subscribe button if you've not done so already. Like this video if you enjoyed it. I will see you again next week where we will be talking about your net worth statement. Thanks a lot.